Okay, what we're going to be talking about today is forecasting using the advanced GET tools. We're going to be doing Fibonacci as well, which is not necessarily an advanced GET proprietary tool. It's just one of the things that we include in a lot of our strategies in advanced GET. What I'm going to specifically be talking about today is trend continuation and trend termination. And that's kind of going to define what tools we use in a given circumstance. What you see on the screen right now with the two blue lines is an imaginary trend that we're going to use here for just an example or two. The first leg that we have on there, the big leg in the up direction, just signifies a good trend or a good surge in a given direction. We're just going to define that as being a trend. The next section in the down direction there is some sort of retracement phase. Those who were long during this original trend have now begun to take profits, and the market has started to pull back somewhat. And what we're looking to find out here is any tools that we can use to kind of determine when this retracement period should be over with. What I'm going to start out using here is the Fibonacci retracement tool. The retracement tool is used in any circumstance when we have a retracement period and we're looking to try to find where the end of that retracement happens in order for the original trend to continue. So I'll go ahead and select my Fibonacci retracement tool up on the toolbar, and incidentally I'm using the eSignal real-time program with the advanced GET studies added to it. The same thing can be done in the end of day program as well. So I'm going to bring my cursor down to the beginning of our imaginary trend down here in this lower left hand corner, and I make my first mouse click right there, beginning of the trend. Dragging my mouse up and to the right, I line my cursor up with the top of the overall trend. That's where my second mouse click is made. And that applies the Fibonacci retracement to the screen. You can see in our imaginary circumstance here that we've pulled back between 38% and 50% on this retracement. I'm going to give you a statistic here in that 60% of all the times that we have this type of retracement period, it retraces between 38 and 50%. 15% of the time, you only see a retracement between 25 and 38%, and another 15% of the time, we see a retracement between 50 and 62%. So the hot spot we're looking for is between 38 and 50%. That incorporates about 60% of all these retracements that we're going to be discussing. Yes? You may have to rejoin the meeting again. Yes. I know you shouldn't have to do that. You can stay with us in the audio. Okay, so we pulled back 38 to 50% in this imaginary market here. This gives us a good idea that this is about the right price that we should expect for this retracement. And we can begin looking for the original trend in the upward direction to continue at this point. Now, realizing that this is kind of a general tool, this is something that we're just using to find a range. If you look out to the right of the Fibonacci numbers, it gives us the price at which those lines are coming in. So somewhere between $7.13 and $8.20 is about where we should expect this retracement period to end. Stick with us. Toward the end, we're going to get more specific than finding, this $1.07 range. We're going to get a lot more refined in what we can do to forecast the end of this retracement period once we begin talking about the ellipse tool. So in our imaginary trend here, we're looking at this being about the right price for us to expect the resumption of the original trend. So I'm going to go ahead and use my drawing tools again and give us an imaginary extension on our original trend. Go ahead and erase the Fibonacci that was there. Now that we've extended or continued our original trend, now we're looking for an area where this trend, we should expect it to terminate. So we're looking for trend termination at this point. So for termination, we're going to use the Fibonacci extension tool. I'll go ahead and select the Fib extension tool. and bring it down to the beginning of our overall trend and make my first mouse click there with my left mouse button. Second mouse click goes at the top of the original surge, and the third mouse click is going to be lined up with the retracement period. And you'll see up here that we have a 0.618 value lined up. Most extensions from the original trend terminate between 62% retracement, or about the 0.618 extension line, and 1. Up here we have a value of 1.0. So this range in here is where most extensions will terminate on the second attempt at new highs. So using the Fibonacci extension, where again we're finding a range of where we should expect this extension to terminate. Most extensions terminate between 62% and 100% of the original surge. So we're using the Fibonacci retracement tool to find where the retracement should terminate, and we should find continuation at that point. So the retracement is used for trend continuation. And up here, we're looking for the trend to terminate. So the Fibonacci extension is used for trend termination. Yes, we're trying to do this one without the use of any Elliott, just so people can keep the overall trending technique in mind. The tools that I'm going to be using, the Fibonacci as well as the mob and the ellipse, do not necessarily have to be used in conjunction with any type of Elliott wave. So I'm going to explain it in generic terms, and then we can apply it to specific charts with Elliott waves as well. Something else I want to state is the usage of each tool. The Fibonacci retracement tool, if I can go ahead and apply that again, is a 2-click procedure. First click at the original trend, second click lined up with the end of the first trend. Fibonacci extension, I'll go ahead and remove that and draw that one more time, is a 3-click procedure. Clicking at the beginning of the overall trend, at the end of the initial trend, and third click at the end of the retracement period. So the retracement is a 2-click procedure, and the extension is a 3-click procedure. Are there any questions on the Fibonacci retracements and extensions? I use the defaults for each one. I'm not changing any of the settings for either one. Any other questions? Let me bump over and make sure I unmute everybody who has joined us recently. Were there any other questions on the retracements or extensions? Okay, you may have lost your internet connection. That's something that happens as well. Yes, the tools are applied the same way, and the numbers are used the same way in a downward trend as well. Let me go ahead and draw that on here. We can actually continue on with our original analogy. We expect this trend to terminate. We'll just say we reach the 0.618 line, and we expect a new trend in the opposite direction. So here's our new trend established in the down direction and in some sort of retracement phase. We could select our Fibonacci retracement tool, make our first click at the beginning of the overall trend, and our second click lined up at the end of the overall trend. And here we are between 0.382 and 0.50 of the original trend, so we should expect some sort of continuation of the original trend at this point in time. Go ahead and draw in our continuation, and then we'll apply our Fibonacci extension to that, making our first click beginning, second click at the end of the initial phase, and our third click lined up at the retracement period. And you'll see that there's our trend terminating between 0.618 and 1.0. So the same thing is applied in the downward direction as well. Any other questions on that? Okay. Let's go ahead then and remove this Fibonacci from the screen. Also, coupled with this is something that we would like to use to be a little bit more specific. It's nice to have a range, a $1 range or so where we expect the retracement to end, or maybe a $2 range where we expect the extension to end, but we'd like to be able to be a little more concrete about that. Especially those who are trading options, you'd like to have something that can give you a little bit more of a predetermined time to lock in profits or to look for what contract month it is you're going to want to be purchasing. So we're going to talk in a little bit more specific terms now using the ellipse and the mob tool. I'm going to go ahead and eliminate some of these lines and get back to our original trend. In this example right here, we've got our original trend once again in a retracement phase. And we'd like to find not only a price area that we should focus on for the original trend to continue, but also what the right time is for us to expect the continuation of the trend. And for that, we're going to use the ellipse tool. I'm going to come back up to the top here and use real bars when defining these. And you can see on this market, we have a determined trend in the downward direction. And we're now looking for where we should expect this retracement to go to. For this, I'm going to use the ellipse tool up here on the toolbar. And I'm going to make my first click at the beginning of the trend, the second click at the end of the trend. And you'll see two ellipses show up on your screen. Those of you who've used the ellipse tool before and have only seen this turquoise ellipse show up, let me explain why I have two ellipses on there. If I go up to my ellipse toolbar button, I can right click on the toolbar button and up will pop the TJ's ellipse properties window. On the left hand side where you see time frame, you'll see that I have a short and a normal time frame turned on. Just as we had different levels of Fibonacci retracements, we have different levels of ellipses to show the retracement phase where it should continue. Fibonacci was used in the generation of TJ's ellipse, but it's not the sole tool. It's just easier to explain it in terms of something that you've already seen. So just think of the short, normal, and long as being different levels of retracement. I draw all of my ellipses with both the short and the normal turned on, and I'll show you the usage of that and when you would want to use one or the other as we go along in this section on the ellipse. I'm going to hit OK, and there's my two ellipses. You'll notice that each ellipse has a body of the ellipse that's colored in the middle, and it's connected by a red line to a shadow of the ellipse. Having a shadow there means that this ellipse is not yet confirmed. However, as each new bar of data comes into the market, you'll notice the shadow and the body of the ellipse move closer to one another. Once the shadow of the ellipse disappears, that signifies that that ellipse has been confirmed. I'll go ahead and add some data here and we'll see this happen. As each new bar comes in, they get closer, and here on this bar, the shadow of the short term or the yellow ellipse has disappeared. This signifies that this ellipse has been confirmed, and if the short-term ellipse is going to hold, we should expect the continuation of the downward trend at this point. There's our retracement phase, and now we're expecting the continuation of the downward trend. I'll go ahead and add a couple of bars here. And you'll notice there's our normal term ellipse that came in. So they both kind of held this area here. But that signified the right time and price for this original trend to continue. And you'll see that the trend continues on in the down direction. So that's the usage of the ellipse in trying to find a continuation in this downward moving market. Are there any questions on how I did that in this trend here? Yeah, you would apply a regression trend channel such as this, and you would have shorted at the low of this bar right here. Let's find out what the low was there. Turn my crosshairs on. The low of that bar was $15.95, so that would have been your trigger. You would have been triggered in on the very next bar to short that market. And again, triggering is covered, I believe, in session 2 and 3 that I recorded in previous weeks. Yes, they are. They're listed under the recorded events. Yes, what happened after that recording was just basically a bunch of random questions that really didn't pertain to the rest of the seminar, so that's why it just kind of abruptly ends. I went back and listened to it again and just kind of cropped it off where it was applicable. Sure. At this point in time, on this given market, if we shorted, we're looking for a place where this downward trend could terminate. We could come in with our Fibonacci extension tool, and I'll go ahead and draw this in. Click once at the beginning of the trend, click again at the end of the initial surge, and apply that to the end of the retracement phase. And here we're looking for a termination of this trend down around $11.24. We could also use TJ's mob if we're looking for something a little bit more specific. It's up here on the same toolbar as the ellipse, and I'll go ahead and select the mob by left-clicking on it. And to draw the mob, we only need to make one click. I'll make my first click right here. And there's the mob drawn on the chart. Let me do a little bit of history behind the mob and how it's calculated. The ellipse is using this initial trend along with the information that it has for the retracement phase in order to give us where it expects the right time and price for that original trend to continue. The mob is using a little bit more information in order to calculate itself. It's using the information from the original trend in the downward direction, as well as this retracement phase, as well as the information that it has thus far for the extension. We call these three sections Momentum 1, Momentum 2, and Momentum 3. The mob needs all three of these in order to calculate itself. If it does not have sufficient data to give us a confirmation for the level for the mob, it gives us this black square on the left-hand side. So this black box signifies that it needs more information in order to give us a confirmation for this mob. What it does not mean is that this mob is worthless. Just because it has a black box here does not mean that the mob does not have value. I've said before in other classes that I have never seen the mob change in price as far as moving up and down vertically after more information has come in. The only thing that I have seen change have been these two black hash marks that you see in the mob. These black hash marks are actually Fibonacci time projections and are what makes the mob a little bit more specific than just using a Fibonacci extension. These time marks signify areas that we expect this mob to be reached. So in this market right here, we expect the mob to be reached at about $13.15 by January 20th of 03. As I continue to add data in here, I'll add a couple of bars, and then I'll erase my mob and redraw it again. And now we have sufficient data. Our black box has gone away, and our time marks have updated themselves. But you'll see that the price has not changed. We still expect it to be around $13.15 in the middle of this mob. So now we're looking for January 23rd to reach our price objective as well. Add a couple of more bars, and there on the 27th, we actually landed in between our time projections. So our mob is reached at this point in time. Are there any questions on the usage of this mob in this example? Sure. I explained it a moment ago with Momentum 1, Momentum 2, and Momentum 3. And it's easiest if you can think of the mob placement in those terms, to think of placing the projection for the mob at the end of Momentum 1. So it's at the end of the initial surge in your trend and before the retracement period. So we don't have to think of it as a specific wave in Elliott wave theory or anything in that regard. If you just think of it as momentum 1, momentum 2, and momentum 3. So the mob was taken from here. Let me actually just go ahead and draw an arrow in there. And that shows us where the mob was taken from. Any other questions on how I got this mob in here? Actually, the mob is just a one-click procedure. You go ahead and type that in here, and I'll reduce the size of that font, as that's going to be a little large. It's just one click taken from this section right down here at the end of momentum 1. The ellipse is a 2-click procedure, and the mob is a 1-click procedure. So we're only having to make one click at the end of momentum 1. It uses all the information from momentum 1, momentum 2, and momentum 3, but it's able to accomplish all of that by only clicking in one spot. Sure. It uses all of the information from momentum 1, momentum 2, and momentum 3, but it's only needed to be clicked at the end of momentum 1. So it's a one-click procedure at the end of momentum 1. No, you don't have to turn the pivot points on, no. Once you've used the program long enough, you'll be able to see the pivot points. And it's obvious that this low right here is a pivot point. You know, we have a good deal of information both to the left and the right that has not exceeded this low. So this is the last pivot that we're going to want to use to generate this mob. And I'll show you examples where you would use different pivots. We're going to continue on with this specific chart as this trend continues and turns to the up direction. Sure. I'll go ahead and erase this one, and I'll draw it in again. I'll take the ellipse tool, and I'm going to make my first click at the beginning of the overall trend, and I'll make my second click at the end of the initial surge, and that places the ellipse. So the ellipse is a 2-click, first one at the beginning of the trend, second one at the end of the initial trend, which gives us our price and time to expect the original trend to continue after the retracement phase. Sure. You're referring to the 1070 oscillator? Yeah, in most cases, the short-term ellipse will be the one that catches the market when the 1070 oscillator has broken through the strength bands. That's a little bit more of an advanced, in-depth way of looking at it, so it's not something I was going to go into here. If we have time at the end, I'll put that up and we'll look at that at the end here. What I want to jump into now is the name of the mob. Everybody knows that the mob stands for make or break, and most of the examples that we show the mob being made, which means the market hits the mob and reverses. There's not a whole lot said about the mob when it's referred to as being broken. What we mean when the mob is broken is, by definition, the mob should either expect the market to bounce off of it and return to the opposite direction, or go through the original mob with renewed vigor, or with more intensity, or with more momentum. What we're going to see in this market here is that we initially had some support at this level, but then the market is going to continue on through with renewed interest. Let me go ahead and add a couple of bars here. Mob is holding, and then there we have a nice gap in prices. Now if I shorted this market over here, and I took profits when we came down and touched the mob, I'm not going to be all that upset that the market continued and went on down. I locked in profits. I was a good trader. I was responsible. I not only protected initial capital, I made a profit as well. But this is an example of the mob being broken. And you can see this renewed momentum that we have in the downward direction. Prices were meandering down until they hit the mob, respected the resistance that it had there, and then just plowed right on through. I'll go ahead and play that on out. And now the market is slowly starting to reverse itself. And you'll notice that this trend wound up terminating in between the 0.618 and the 1 of the Fibonacci extension. So that it terminates between 0.618 and 1. I don't have any direct research on that, but in my experience it's been about 60 to 70% of the time it winds up between 0.618 and 1. So that's the downward trend on this market. I'm going to go ahead and add some more information here. We're going to see trending establish itself in the upward direction in the same market. Alright. You can see we now have established a good bit of a trend in the up direction. So I'm going to want to try to find out here what's the right price and time for this retracement that we've come into over the last 3 bars or so to end and for the original trend to continue. So I'll go grab my ellipse tool, click once from the beginning of the trend, make my second click at the high, and you'll see that our short-term ellipse has already grabbed the price and time, and we should expect that original trend to continue. And then it came back down a little bit, met up with our normal ellipse, and then the original trend continues. So in this instance, the ellipse was a little early in signifying the right time, but it did give us the right price, just shy of $13 for the original trend to continue. And now we've started the continuation of this trend. I'm going to go ahead and continue to add bars here. And here's a little bit of a retracement again in the downward direction. I'll go ahead and do the ellipse once more from low to high. And there, the short-term ellipse grabbed the right price and time for this original trend to continue. The normal ellipse was ineffective at this stage here. And now we have another trend in the up direction with another retracement. Continue to use the ellipse. Draw it from low to high. Right there, both ellipses came in on the same bar, and it was the right price and time for the original trend to continue. You can see each one of these times we have a retracement, the ellipse comes in and catches the right price and time for the original trend to continue. Now, we've got ourselves a pretty significant trend going in the up direction. I'm going to show this with the trend channels here. We've got a significant trend moving in the upward direction. All this information is inside of our regression trend channels. And now the market begins to move out of these big channels. This is signifying a bigger section of retracement here. I'm going to go ahead and use my ellipse tool from the beginning of the overall trend to the end of our big trend that we've got here. And here we've got a short-term and normal ellipse showing up. As I add bars, right here on June 16th, the short-term ellipse catches the market and signifies the right price and time for this original trend to continue. I don't need the normal ellipse at this point. Go ahead and turn it off. And the original overall trend continues when that ellipse catches the right time and price. So I've just done this all the way up this trend. I just continued to use the ellipse to find areas where the original trend should continue after a small retracement phase. Now at this point, I'm beginning to wonder where this overall trend would terminate. So I'm going to apply our tools that we learned for the mob, and we're going to look at momentum 1, momentum 2, and momentum 3. I'll use an arrow because we don't know the end of momentum 3 as of yet. And we're going to take a mob calculation from the end of momentum 1 to try to give us the right time and price to expect the termination of this overall trend. I'll select the mob tool and click from that bar. The mob actually showed up here, so currently we're looking for about the 10th of July for this market to intercept this mob, bearing in mind that we have a black box showing up on the left-hand side. Go ahead and add a bar, and now we've hit our mob. Go ahead and remove that mob and redraw it again. We've still got a black box. Then add one more bar, remove it, and draw it once more, and the black box has continued, or has disappeared rather. It's been my experience that the black box will disappear after the extreme of momentum 1 in price has been taken out, which happened on this tall bar, and one more bar comes in. It's been my experience that that black box will disappear at this time. It's unfortunate in this example in that we had already reached the mob. That's not always the case. Typically there's still more room to redraw the mob in order to not have the black box there. So this example doesn't really reflect that. But at any rate, that black box will disappear once the extreme of momentum 1 has been taken out, plus one bar. That's the right time to redraw your mob. But in any event, we reached the mob and should expect some resistance at this point. Was there a question? Sure, I'll go ahead and remove the mob that I have on here now. Select the mob tool, and I'm going to make just a single click up here at the end of momentum 1, and up pops my mob. So it's only one click at the end of momentum 1. So that's the mob projection, and we were projected by the mob to be at a price of at least $23.21 around July 10th. And if I add one more bar, that puts us at July 10th, and we're just below that mob right there on July 10th. So if you were an options trader, picked up a call back here in this area about the 18th of June, you could have given yourself a good time and price to be at about $23 on July 10th. Just as the example that we showed in the down direction, if I add a couple more bars here, there we see some gapping occurring to the upside. This mob was just broken with renewed momentum to the upside. And now we're wondering, well, let me get rid of some old drawings over there. Now we're wondering where this is going to terminate. Now that we've broken the mob, where is it going to terminate? And we can do a couple of things to determine that. It should be experienced now with the Fibonacci extension. I'll go ahead and grab the Fibonacci extension tool. Make my first click at the beginning of the overall trend. Second click at the end of the overall trend. And apply that to the end of the retracement period. You can see that in this case our mob landed right on the 0.618 extension area. So we are within the 0.618 to 1 for the termination of this trend. However, I'm going to show you a little bit different technique here. The mob from this pivot was violated. So I'm going to want to find the next previous pivot that's a good area to take a mob projection from. I'm going to bump up to a weekly chart to show this. I'm on a daily chart right now. I'm going to go to the weekly chart. And here's the weekly chart. The previous pivot that we just overtook on the weekly chart is back here at the beginning of the trend that we were using in the downward direction in our previous example. This was the last high pivot that was overtaken during this current upward trend. So I'm going to take a mob projection from this previous pivot. And then move back to the daily chart. That mob from back there would have given us the right price and time for this new extension to reach our new mob objective up here at the top. If I back it up a couple of days, you'll see that our projection from that mob was to reach it on the 25th of July. This is data as of the 24th. If I add the next bar in there, the market comes up and reaches the mob on the 25th of July. So that's a mob projection from a longer term on the weekly chart, which shows up to be pretty effective there on the daily chart. Are there any other questions on that upward trend that we just looked at? Let me bounce back over to this here and check on some of the other callers here. Everyone seems, yes. I asked the programmers why the mob has two colors, and really it had no significance other than to show midway through the mob. The other thing that it does show is, if you notice here, these mobs that I've drawn from a pivot pointing in the up direction, the turquoise side of the mob is facing down. And over here with the mob that we took from a pivot pointing in the down direction, the turquoise is facing up. So a mob that's showing support, the turquoise faces up. And a mob that's showing resistance to the upside, the turquoise is facing down. That's really the only significance to the variation in color of the mob. Sure. Any other questions on the mob? Okay. Well, that's sort of what I explained when I was talking about when the black box disappears, that the mob is not confirmed until that black box disappears, which does not happen until the extreme of momentum 1 is taken out. However, I demonstrated that the price of the mob generally does not change. The only thing that adjusts is the Fibonacci time projections for that mob. Correct, yeah. It doesn't change in price up or down. Just the time projections will sometimes change from left to right on the time scale. Any other questions on the mob and ellipse? All right, so we started out using Fibonacci to find a general area where we should expect continuation or termination. And then we got a little bit more specific in the usage of the ellipse and the mob. The ellipse being used to find trend continuation, the mob being used to find trend termination. Well, for the tools and the strategies that we teach, we don't teach to enter the market based on an ellipse. The ellipse is used more for a support of a trading strategy. For instance, if this back here were a type 1 where we had a wave 3 in the upside and this was a wave 4, this ellipse would have given us a confirmation for the type 1 trading strategy that this is the right time and price for that wave 4 to end, and we can feel good about taking a long position at that point in time. So we're not necessarily triggering our trade with the ellipse. It's just used for confirmation. Now, if you're a very aggressive trader, you can use the ellipse to do that, but the success rate of doing such a trading strategy is not very high, using the ellipse by itself. Sure. Typically especially in this example here, when a mob is violated, it's violated in an extreme way. Like here we saw some gapping to the up direction, indicating some renewed momentum to the upside. And if I were to put the Elliott waves on here, let me back it up a couple of days. I'll put the Elliott waves on here. And you'll see that this in fact was a type 1 trade back here, and that even back when the mob was reached, that was labeled wave 5. And as we went through with renewed momentum, just breaking through that mob with gapping action going on there, that gave us an indication of maybe picking up more strength in this market. And if we actually fast forward up to today, we see now that we've relabeled that wave 5 to a new wave 3. So that just indicates that this market, once it broke through this mob, just began picking up momentum again and is now recounted to wave 3. So typically when it's broken with great strength. But it did reflect that this was a key area in the market. You know, we experienced some resistance, and then it had to go through with great strength to break that resistance. It then came down to the level of the mob and bounced off of it to the upside. Just a basic technical analysis rule that previous resistance can offer future support. Does that answer your question? Okay, excellent. Are there any other questions on the mob and ellipse? Okay, well, next Wednesday, we're going to cover some questions and answers on those who have viewed sessions 1, 2, and 3 on the Introduction to the Advanced GET Studies. And then following that week, each Wednesday for the next few weeks after that, we're going to talk specifically to real-time individuals using the Advanced GET Studies in the eSignal program and how to maneuver around in that program. So I appreciate everybody attending today. I'll still be around here, and I'll answer a couple more questions. If there's a couple people that want to stay around and answer a couple of questions, go ahead and yeah.